Hello again, everyone. This is the technical analysis of the stock market video. We're going to focus on the two stars of the ETF world that for 2018 that are darlings no more. The two darlings are darlings no more: consumer discretionary and technology. Now, consumer discretionary was the leader at one point. It peaked on September 20th. For the year, at that point, it was up 19.4%. As of Friday, it's only up 3.37% now. Technology was up 18.7% as of October 3rd. Right now, it's up less than 1%. And we're going to take a look at the two stocks, the two major holdings in each one of these: Amazon in consumer discretionary and Apple in technology. So stay tuned. All right, let's dive in here and take a look at consumer discretionary. What you can see is that, first of all, it's broken this trend line of the, I'll say the last 6 months or so, as it started to break down from that high around the 1st of October. Now it's come down to this trend line here, and this trend line is about a 2.5-year trend line that you're seeing here in consumer discretionary. It broke through that, pulled back, and now we're resuming the trend to the downside. Let's take a look at the weekly chart so we have a little bit different perspective. Consumer discretionary, I mean, it really has been a stellar performer throughout the entire bull move, but I really think that there have been 5 waves completed to the upside here in this bull move, and therefore I think the bull move is over. So what's going to happen now? What's going to happen now is we're going to correct this entire 5 waves. So I think at a minimum that means we're coming back down into this 4th wave, which is down into this territory, and we'll watch and see how the waves unfold. Let's take a look at Amazon, which is a holding that accounts for 20% of consumer discretionary. Okay, here's Amazon's daily chart, and you can see it's broken this trend line. This is a 1-year trend line. It broke down out of that around the 1st of October, and now we've come down, hit this trend line, which is a 4-year trend line, all the way back really from this low here in January 2015. We're approaching January 2019, so it's almost 4 years of a trend, and we're right at it, and then we broke it, came down, and broke through it here. This is it's a daily, so this is last week. Okay, let's go to the weekly chart, take a look at Amazon. Here's the picture with those same trend lines, longer term picture. What I want to look at here is the view that I've got, and this is all the trading on Amazon. This is a weekly view. This is back from 1997 when it first went public. Okay, that's the very low point back in here. I believe that what we've had is 3 major cycle waves, and that what's coming is a 4th cycle wave pullback. All right, so here's the channel, the bull channel of the last leg up within this 3rd cycle wave, and I think that we've got our 5 primary waves within there. And you know, you can see here was the low back in 2001, and then we rallied up to this high. And so now what I'm doing is I'm connecting a trend line from the top of cycle wave 1 to cycle wave 3 and saying, well, where could cycle wave 4 come in? Well, you know, you can project that it would come all the way down to the bottom of the channel, but it doesn't necessarily have to go that far. And one other target is, number 1, it can't overlap wave 1. Okay, so it's not going to come below this point. It shouldn't go below 113, let's call it. And my initial target would be back down into this range of the previous 4th wave. So the bottom line is we're sitting at 1504. This has got a lot to correct, but it's come a long way very fast. So that's the picture I've got on Amazon. Let's take a look at XLK. Okay, here's the picture on XLK. This is a daily chart, and you can see how it's broke down pretty sharply from that October 1st, October 3rd high that it had in here. You know, and again, XLK was up 18.7% for the year. I mean, here's the year-end close right here, and the dotted line go across horizontally. That's about where the year-end close was, and you can see why I said that we're up less than 1% right now. We're up 0.2% because we are basically closing as of Friday right about where we closed at the end of the year last year. So it gave it back pretty quick. And so this is the picture. I think we've got 5 primary waves up. Now, one of the things, there's a couple ways to look at this. And let me zoom out. Here's the blow-off high of the dot-com era in March 2000 when the NASDAQ peaked in March 2000. So after the huge downdraft that occurred where it lost, 90% of its value, this is either a counter trend move that's underway that looks like it's complete with 5 primary waves up, or coming off that low bottom, this is a 5-wave move to the upside of a first cycle wave, let's call it, to the upside. That is a possibility too. But either way, I believe that 5 waves have completed in here. And so therefore, I'm looking for a correction, looking for this to come back down. Let's zoom back out in here. So this is the picture, and you can see what just happened on XLK for the week, down 4.13. We're already back into this wave here. I think we got a lot more to go on this ETF. Let's take a look at Apple. Okay, here's all the data I've got in this particular software package on Apple back to 1993. Because my data only goes back to 1993, I want to show you a different view. I'm going to go back into another software package. Okay, this goes, Apple went public on December 12th, 1980. Turns out December 12th is my birthday, so that was pretty nice. But no, I wasn't born in 1980. All right, but the 12th is my birthday. So they came public here on December 12th, 1980, and the all-time low, July 30th, a year and a half later, 1982. Just so happens that's when I think this last major cycle wave up in the stock market happened also. And so I think what happened here with Apple is that we had a first cycle wave high here in 1983, a second cycle wave low back over here in 1997. The arrows, that's when Steve Jobs left, okay? And here's where he came back in 1997. So let me, if I look at all the data here, what I'm looking at in my other software package is right from here, okay, from 1997. So let's go to that. So here's where cycle wave 2 is, 1997. I believe that we have now completed cycle wave 3, then 4, then 5, for 5 major cycle waves up. Now you look at this and say, well, Joe, this looks pretty short in here and pretty small in here, but the numbers are pretty big, because you got to remember all the way down here, split adjusted, what is this, like 45 cents, 46 cents, something like that, okay? And here we are sitting up here right now at 172. But this is the picture that we've got, and so what I'm watching for now is for Apple to correct in here, and what we're looking at is what is it doing in this last leg up. Let's see, here's the move up from the 2016, May 2016 low in here. Nice channel to the upside. We've shattered that down to the downside here in terms of that channel. Let's take a look at the daily chart. Here's a better picture of that in terms of what's going on. And right now we closed this gap here on Apple, and we are partially into this gap right here. And looks like we're going to probably close that very quickly too. So I really think that there's a pretty good chance that the bull move in Apple is done, and now it's just watching the wave counts for the corrective activity. Okay, that's the end of this update. And if you'd like to get more insight into the S&P, the Dow, the NASDAQ, head on over to my website, subscribe to my email list. And when you get on that email list, I've got a Black Friday special out here right now that's good through Monday night at 10 o'clock Central Time. You might want to check that out. So anyway, everyone have a wonderful rest of the weekend. We'll talk to you on that next video.